The stock markets dived into the Q3 earnings season with the S&P 500 taking an 8% dip since August. The winds of volatility are blowing stronger, making investors consider safer plays. The Schwab US Dividend Equity ETF seems like a sturdy, value-based investment choice. We're in the thick of the Q3 earnings season, and the S&P 500 isn't strutting its stuff. It's down 8% since August kicked off. As if that's not enough, we're sailing in choppy waters with the VIX soaring over 20. Increased volatility paired with persistent challenges like sticky inflation, hefty interest rates, and a Federal Reserve keen on more hikes are giving investors pause. Folks are starting to think about playing a bit more defensively. One way to do that? Seek out those high-quality, undervalued investments. One gem in that field is the Schwab US Dividend Equity ETF. Sure, SCHD has had a tough year, lagging behind the S&P 500 by falling 9%, while the broader market is up by about 10%. But hey, that's what makes it enticing right now. Seems like a good time to snag it while it's down. SCHD hit the scene back in 2011, and since its inception, it's pulled off a total return of 300%. Before the start of 2023, SCHD had actually outshone the S&P over the past decade, boasting a total return of 325% compared to the S&P 500's 295%. But as we've seen, the 2023 S&P 500 gains have been mainly fueled by mega-cap tech and communications service companies. Just check out these year-to-date returns for some of the big players: NVIDIA, NVDA, plus 183% Meta platforms, Meta, plus 156% Tesla, TSLA, plus 72% Alphabet, Google, plus 54% Microsoft, MSFT, plus 37% Apple, AAPL, plus 34%. However, peek at the equally weighted S&P 500 RSP, and you'll see the index as a whole hasn't been as impressive as it seems, down 2% year-to-date. That says a lot about how one-sided the year-to-date returns for the S&P 500 have been. Up until now, the leading sectors in the S&P 500 have been communications services and technology. Now, when you dig into SCHD's sector breakdown, you'll notice something interesting. Technology ranks only 5th in terms of the largest sector within the ETF, making up about 11.8%. As for communication services, it's an even smaller slice, accounting for just 4.4% of SCHD. As you observe, this ETF offers excellent diversification, a key strategy for long-term wealth creation. However, in the context of 2023's market trends, an ETF lacking technology or communication services might not perform as strongly this year. The leading holdings in SCHD. Understanding that this ETF spans various sectors, let's delve into its top individual holdings. The top 10 positions exhibit a fairly balanced exposure, accounting for 40% of the ETF, while the entire SCHD portfolio boasts 104 positions. Now, focusing on the top 5 holdings, let's closely examine whether they're trading at an attractive valuation or not. Amgen, Amgen operates in biotechnology and boasts a market cap of $149 billion. In the last year, their stock has seen a modest 5% increase. Looking forward, analysts project an expected EPS of $19.78 in 2024, setting a forward price-to-earnings (PE) ratio of 13.8x. This figure is just under the company's 10-year average of 14.4x. This suggests that the stock might be trading slightly below its historical average valuation. Chevron Corp, CVX Chevron, a diversified energy conglomerate, holds a market cap of $311 billion. Over the past year, their shares have dipped by 1%. Analysts anticipate a 2024 EPS of $15.06 per share, resulting in a forward PE ratio of 10.7x. This number is notably lower than the company's 5-year average of 14x. The lower ratio suggests that the stock might be trading at a more discounted rate compared to its historical valuation. AbbVie, AbbVie operates in the pharmaceutical sector and recently saw its top-selling drug, Humira, lose patent protection in early 2023. Despite this, the company has diversified its portfolio with several promising new drugs, aiming to sustain growth. Currently, AbbVie boasts a market cap of $258 billion. In the last 12 months, its shares have dipped by 4%. Looking ahead, analysts forecast a 2024 EPS of $11.07 per share. This sets a forward price-to-earnings PE ratio of 13.1x, slightly higher than the company's 5-year average of 10.8x. This suggests that the stock might be trading a bit higher compared to its historical valuation. Broadcom Inc., AVGO Broadcom, operates in the semiconductor industry and has been among the top-performing dividend stocks, marking an impressive nearly 90% increase in its stock value over the past year. The company currently holds a market cap of $352 billion. Analysts project a 2024 EPS of $46.06 per share for Broadcom, resulting in a forward PE ratio of 18.7x. This figure surpasses the company's 10-year average of 15.0x. The higher ratio indicates that the stock might be trading at a relatively higher valuation compared to its historical average. Merck & Co., MRK Merck & Co., a pharmaceutical company, has shown resilience in comparison to others in the past year, with its stock climbing by 10%. Currently, MRK's market cap stands at $260 billion. Analysts are eyeing a 2024 EPS of $8.49 per share for Merck, translating to a forward price-to-earnings PE ratio of 12.2x. This figure is slightly lower than the company's 10-year average of 15.3x. It suggests that the stock might be trading a bit lower compared to its typical valuation over the past decade. The standout feature of SCHD, beyond its role in diversification across various sectors, lies in its robust dividend yield and consistent growth. Over the last year, SCHD distributed a dividend of $2.62 per share, resulting in an attractive dividend yield of 3.8%. This yield surpasses that of many other high-yield ETFs like VYM or HDV. Not only does SCHD offer a promising yield, but it has also increased its dividend payout for 11 consecutive years, boasting an impressive 5-year average annual dividend growth rate of nearly 14%. We're committed to expanding our coverage of the ETF sector as part of our ongoing research efforts. That's why we've started exploring various ETFs like SCHD. We hope you find our continued exploration of ETFs engaging